Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Friday, the 11th of November. Yes, it's Veterans Day. Ask yourself this question: is personal one-on-one coaching right for you? That's MarketClub coaching. You can find out with a free consultation. Just give us a call at 877-219-1482. That's right, you can call us right now, 877-219-1482, and see if personal one-on-one Market Club coaching is right for you. Now more than ever with these crazy markets, you really should do that. So the question right now is, do 3 big changes in Europe solve the sovereign debt problem? And that's the question. I'm not so sure. Greece's swearing in of a new Prime Minister, Lucas Papademos, is one change. The second change is a new president of the European Central Bank. That's Mario Draghi. The third change, and this is a big one and has not taken place yet, is when and if Silvio Berlusconi resigns from office. Mario Monti apparently is the front runner for the job. Not a big deal for Italy to change governments, as they have had over 60 new ones since 1948. With all the changes taking place in Europe, it isn't going to change the overall dire financial picture overnight. Changing governments is one thing. That's easy. Getting the citizens of that country to accept draconian austerity measures is a totally different can of worms. You know, the markets here in the U.S. are like a roller coaster right now. So far this year, the Dow has seen 88 triple-digit trading days, compared to just 70 in 2010. As we have stated in some earlier blog postings, the volatility factor remains extremely high in all the markets as uncertainty reigns and rules right now. As always, we are going to rely on our trade triangle technology to help guide us through these crazy times. Now let's go to the charts and the video and see how we can maintain and create your wealth in 2011. So don't forget, give us a call. It's the last time this week we'll do this, so give us a free consultation is yours at 877-219-1482. Now let's go to the charts, and we're bringing up our portfolio, and look at these plus 55, plus 55, plus 55, plus 65. These are almost all trading ranges. The only two that aren't trading ranges right now are the dollar index, which is plus 90, meaning the trend is up, and also gold. Everything else is stuck in a trading range. So let's go to our first market, and that's going to be the S&P 500. And we'll go at 6 months. We've got a weekly chart here. The market is barely higher for the week. And we are going to be looking at a daily chart. You can see today's sharp up move, but we were just as volatile on the downside last week. And I think that's the important thing. We closed last Friday at 12.53. We're 12.62. We still have 3 more hours left to trade. We could change basically, we could close basically unchanged for the week. It's still that much uncertainty is in the market. Certainly there's a very clear line drawn here, and I want to share that with you. And here's what we're looking at. We say it's a trading range, which we believe it is, but you only have to draw a line right here. Is right across here. That's 12.20. That's the line in the sand on the downside. That's support. And right around here, so around the 12.95 to 13 level, that's resistance. The market needs to move out of this area, either on the downside or the upside, to really change the dynamics of this market. Right now, if you could look at this market, we've just gone, and we could be down here on Monday. If something comes out of Europe that's not good, if Berlusconi refuses to resign and wants to hold elections, you could be looking at another 3 months of uncertainty, which will not be good for this market. So I think that's something to look at. The 12.20 on the downside, the 12.95 to 1300 are trade triangles are in plus 55. The monthly is down like here. The weekly is up, and the daily is down, even with today's sharp up move. So you've got this kind of trading range that's taking place right now, and I think that's been very disruptive for a lot of traders. And we're seeing a lot of things going on. So I think the trading range is likely to continue until we see something change out of this two levels we just outlined here. So that would be my take on this. So let's take everything off the screen. Go to our next market we'll be looking at. And today I've actually put in I wanted to share with you the NASDAQ and show you that. And let's go to that right now. So here we have the NASDAQ. It's a composite. Now this market's unlike the S&P 500, which is slightly higher for the week. The NASDAQ is actually slightly lower for the week. And we can tell that very quickly with MarketClub. You can see the plus 55, which is a trading range, of course. But just pulling this down here, going to a weekly chart, you can see that we have this is a very tight range today, even today so far. But we're slightly lower on the week. We closed last Friday at 2,686. We're calling 2,677, so down about 10 points, nothing to speak of. It's almost unchanged. But you can see the line in the sand quite clearly here between 2,750 and the 2,600 level. So that's where we see the key levels in this market. So we've got a lot of, it's still just a lot of uncertainty. Nobody knows. The bulls aren't strong enough to push it higher, and the bears aren't strong enough to push it down. So I think it's just more of the same. Next week should be a very, very interesting week. But be sure to join me this weekend because we'll be looking at these markets on a weekly basis, how they close, because we still have, as I said, several hours left to trade today. And we could see some changes still yet, either on the upside or the downside. As I said, we have a trading range mentality, and I think that's something to really pay attention to right now. So next market we're looking at is the spot silver. Spot silver. Last Friday, spot silver closed at 34.12. We're 34.72. We're practically unchanged for the week. Really, I think, disappointing to a lot of people who have been watching gold go up, but silver has been unable to mount that same veracity to the upside. We've got a monthly that is negative, a weekly that is positive, gives you the conflict, and we have a trading range. A plus 55 is a trading range. And one of the things we do here, obviously, and we've shown you this before, you can put our Donchian trade channels on and our parabolic. And you can see the parabolic actually gave a signal yesterday when we traded down. But for the most part, we're stuck between $36 on the upside and about $32 on the downside. It's just a trading range. And it's really, until we come out of that, it's probably best left alone, in my opinion. So next market we're looking at is going to be the gold market. Now, the gold market, unlike the silver market, is very different. I think that the low that we saw yesterday, we were looking for a cyclic low today. I think probably came in maybe a day earlier, but I think this low is going to hold. I think it's going to be very similar to this low, and I think we'll see this market climb up and probably test the $1,800 level. It's not that far away. Now, gold is actually higher on the week. It's probably and the gold last week closed at $1,754. So we're up about $32 for the week. The market acts fairly well. We're certainly within the confines. We are a little bit overbought, but you can see this market is beginning to just soften up a little bit in some of the buying power on the upside. So if you're trading this market, I definitely want to have stops in. If you're a short-term trader, you may want to just be on the sidelines and wait for something else to get some momentum going. If you're an intermediate-term trader, you may want to move some of your stops up to this low that was seen on Thursday. So let's go to our next market, and that's going to be the copper market. Now, the copper market, if you remember, we've talked about the copper market being a fundamentally economic model in terms of it follows really the economies of the S&P 500 or the stock market. Of course, the stock market's up. This is up. But this market for the week closed is down quite a bit. We closed at 3.563 last week, and we're at 3.456 right now. So I think for the week it is lower despite what we're seeing. Now, we also have the market going below the PSAR. That's the parabolic stop and reverse. You're also, if you go down here, you'll see that this is turned down in the MACD, pretty unusual, the first time in about a month or 5 weeks. And if you look at this on a weekly basis, it's not looking that great. It's not looking bad, but it's not looking great. Certainly the 3.20 level, which is down here, we get to close below that level. That would be very negative in my mind for next week. So let's see how that plays out. We're going to go to our next market. In the next market we're looking at right now is the crude oil. Crude oil continues to cruise up. This is a weekly chart, but for the week we are actually quite a bit higher. We closed last Friday in crude oil. This is the December crude oil contract. We closed at 94.48. We're currently trading at 98.54. So we're up about $4 for the week, about 2%. Actually, I can tell you exactly where we are. We're actually up 4.37%, excuse me. But we're closing in on this $100 level, and that's going to be a very, very big psychological level for this market to overcome. I would expect we will see some professional selling coming in around that level. We're also at the top of the Donchian trade channel, but you can see this market's really gone straight up from this level here. The lows were 75.15, so you've actually gone up some almost $25 in this market just in a period of 6 weeks. So amazing move, and you're also very overbought for the first time on the weeklies. You've got your MACD working for you. Our trade triangles are still mixed, which is very interesting. We have a plus 60, which is a trading range. And I know some of you know, let's take a look at the daily charts. And let's just go a little closer in on that. This is going to be very interesting to see where we close today in this market. We just popped out of the Donchian trade channel. And like here, I think we could see the market come in. But next week is probably where to see where we're heading on that market. So let's go to our next market, and the next market is the dollar index. Now the dollar index is really kind of interesting. It popped out of the Donchian trade channel yesterday, came back in today, but generally speaking, we have very powerful trade triangles right now on this market. So it's monthly is up, weekly and daily all up, a plus 90, meaning a strong uptrend. I think that the pullback today, depending on where we close, is going to be just that, a pullback, and I think we'll see this market go higher. Last week we closed at 76.93, and we're closing at 76.91. It looks like that's where we're currently trading, unchanged for the week. Not too much going on, but generally speaking, it would look as though this market wants to do a little bit better. But next week is going to be a very, very important week for the dollar index, in my opinion. So let's go to our last market. The last market we're looking at is going to be the CRB. That's the Reuters Jefferies CRB Commodity Index. And again, this is sort of flattened out. We've got a minus 55, indicating that it's a trading range. We have our monthly in conflict with our weekly, and it's in conflict with our daily. So you've got a minus 55, indicating a trading range. And if one goes down here, you can see that we're getting very, very close on the MACD of turning down. Now, if crude oil turns down later today or even tomorrow, next week, that will in fact turn this market down. We closed last week at 76.90. We closed last week in this particular CRB index at 320.44 with 319.79, so basically unchanged for the week, a few points lower. But there's no reason to get enthusiastic about this market until it really gets rolling. We're trapped between the 325 level on the upside and the 315 level on the low side. Now you can see the PSAR, which is right here. It comes in today at 317.14. If we close below that level or hit that level today, that will indicate that this market may be a little bit more on the defensive next week. So anyway, we've covered our normal markets. I'm going to be here tomorrow on the weekend, and I really want to see how these markets close, because I'll bring you a very in-depth weekend update tomorrow. So be sure to tune in for that right here on the channel. And also, if this is your last chance this week for personal one-on-one Market Club coaching, give us a call. The call is free, and the free consultation is yours for the asking. 877-219-1482. Hey, this is Adam Hewison for Market Club. Have a successful and profitable trading day.